Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Paul Strome, Nicole Dines, and Dan Innes. Dan, let's start with you. What have you been watching this week?
Well, it's been a hot week, so we've been following quite a lot of these stories that are warming the market up here in London on our news feed. One of them in particular was Westfield London's former House of Fraser department store under Ministry of Sound's plans to transform that entire space into a huge gym, restaurant and office development. The nightclub owner says it's going to hold fitness raves at the Ministry Shepherd's Bush, as it's going to become known. It's interesting because it's going to introduce flexible office space to Westfield London, and that's something that Scott Parsons, the chief operating officer at Unibail-Rodamco Westfield, was commenting on. He's saying that repurposing a lot of the retail space is a good thing. I think the element of hot desking and co-working space in a centre like Westfield London could prove very, very attractive. Elsewhere, we saw the Sterling Prize shortlist released, which is, of course, from RIBA, the Royal Institute of British Architects. That's 6-strong shortlist for the Sterling Prize, which is awarded annually to the building judged to have made the greatest kind of contribution to British architecture. That includes 2 ambitious housing projects and 4 places of learning, which is great to see. Elsewhere, we've seen the redevelopment of Dock A at Zurich Airport take a further step forward. Pragma, the consultants, were part of the winning team in that bid. The new Dock A is going to have quite a new flexible architectural structure that's going to enhance passenger experience and use sustainable materials. That work might not even begin until 2030, but it is an investment of over $700 million. So quite significant. And the kind of last story that put a smile on our faces was watching the TikTok video that came out of Canary Wharf. They have now formed a partnership with the Love Open Water Group, which is essentially opening up part of the open water dock space at Canary Wharf so workers can go and take a dip at lunchtime, which is particularly nice, Richard, when temperatures are pushing 40 degrees.
Yeah, pushing 40 degrees, and actually that was in the shade, so it was easily 50, certainly. Well, good to see that you started with raves and ended with TikTok and outdoor swimming. Dan, a couple of things I noticed as well was Nuveen Real Estate and Kronos Real Estate Group acquiring development sites in Madrid and Barcelona, planning to invest 128 million. So that's 600 new rental homes there, bringing their overall portfolio there in Iberia up to 3,000. And also, interestingly, we don't get many stories about Greek real estate. But this week in the news, Invel's 600 million bond refinancing its stake in Greek REIT Prodea. So that was interesting to see. Paul, what were you watching?
Well, it's been a bit of a historic week, quite apart from UK politics. The European Central Bank raised interest rates, its first rate increase in 11 years, and surprised the markets by increasing its benchmark deposit rate by 50 basis points to 0%, breaking its own guidance for a 25 basis point move. Obviously, it's not the first central bank to have raised rates, and Bloomberg Intelligence has warned that the recent rapid rise in interest rates could hit office values by as much as 30%. In its report, Europe Real Estate 2022 Outlook, the firm also warns that a meltdown could trigger a reform of REIT structure, which it says is proving too restrictive to cope with crises and is hampering access to capital. Susan Munden, the analyst that authored the report, writes that European REITs average 41% price discount for net tangible assets is not just a reflection of the interest rate headwinds, but is also a result of failings in the REIT structure. Munden also cautions adherence to the notion that real estate is a hedge against inflation, saying that this is true if rents rise and tenants can afford them. Savills has meanwhile warned that Germany's 12-year bull run of yield compression and high transaction volumes is over. Commercial property investment deals worth 20 billion euros took place in the first quarter of the year in Germany, but transaction volume in Q2 plummeted to just 8 billion. The firm said that the current period of adjustment heralds the start of a new cycle, and transaction volume for the full year is likely to be less than 50 billion. Last year, 60.7 billion. The firm states in its investment market Germany report that the super cycle is over. Markus Lemley, the CEO Germany and head of investment Europe at Savills, said while market participants have been anticipating a reversal in interest rate policy and a potential correction in the real estate market for some time, they've been surprised by the speed at which the transformation occurred. Then, in an interesting departure for a logistics property specialist, Prague headquartered P3 Logistics Parks announced that it's to develop one of the biggest data center campuses in Europe on land which was formerly part of a large US garrison in Germany. P3 has acquired the former barracks at Hanau, which is east of Frankfurt, from the government, and will develop P3 data center Hanau on a 250,000 square meter site. That's 2.7 million square feet. Construction will be phased, and at least 8 data center modules will be built over the next 10 years. P3 said that climate protection and energy efficiency will be central to the design. And the campus will be designed, built, and operated sustainably. The campus will have 180 megawatts electricity supply, 100% of which will be from renewable sources, and it'll have a combined heat and power plant on the site. P3's head of data centers, Samir Selçukoglu, said that the project in Hanau will be one of the largest data center campuses in Europe. The exciting question we have tackled is how can we reconcile a large-scale data center with the challenges of climate change?
Yeah, a lot of focus again on climate change, sustainability, obviously record temperatures across many places in Europe, and you've seen the fires as well. Picking up on logistics as well, I saw the Iron Mountain, which is 1 million square feet in Rugby in the UK. A significant deal there for Tritax. Nicole, what have you been tracking?
Yes, well, it has not been a good week for Italy with the resignation of the highly respected Mario Draghi, but Coima, the Milan-based company, real estate, had a very well-timed briefing to investors as a market update, and they were very upbeat. They believe that the political crisis in Italy will not derail the economy's positive growth trajectory, and its real estate market will continue to attract international capital. They have a very belief that the fundamentals of the market are very strong, and the data for this year so far are pretty good. The transactions reached a record volume of 6.2 billion euros in the first 6 months of the year, which is almost double the 2021 figure. And it's been largely driven by the office and logistics sector. And it's actually been picking up in Q2 in the second quarter. Logistics investments, for example, increased by a staggering 264% to 1.2 billion euros because they expect strong rental growth in the sector. So they expect, obviously, a slowdown in investment in the second half of the year because of political uncertainty and also interest rates, as we were discussing, which are making investors very nervous about committing. But in the first year, so far this year, transactions have been driven by international investors. 80% of the transactions were done by foreign capital, which the change that has been, years ago, Italy used to be dominated the market by private equity, by sort of, quick fix, quick turnaround investors. Well, now the private equity is taking a back seat, and they're very much, the market is dominated by strong institutional capital with a sort of mid to long-term view, which is a positive for the market. And Manfredi Catella, the founder and CEO of Coima, said that they expect this strong investor interest to continue, but to maybe shift a little bit to residential, because the Italian market is seen as very much underdeveloped, and there's a strong demand and very little offer. And they've seen in the Italian market the same trends that we've seen in the European market that we've discussed many times. The shift to quality is very much present, both in every sector, but certainly in office and residential. So they expect a lot of speculative developments, new builds, but also a lot of repurposing, especially of office buildings, maybe in secondary areas, because people will only want grade 1 sort of prime CBD offices. But they can be repurposed into residential, which is much needed. So they expect a lot of activity in the market despite the political uncertainty.
Yeah, I saw a few other kind of brief things as well. I saw Blackstone and Hudson Pacific getting planning permission for a new film studios in Broxbourne, which is kind of 17 miles north of London. So interesting to see that. Also, in terms of people moves, Annette Kroger being announced as the new CEO for real estate for Europe for Allianz. Thank you, Nicole. Thank you, Paul. Thank you, Dan. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.